I'm Mike Harris. I've been a head of research for emerging Europe, Middle East, and Africa. I've been an EMEA strategist, head of global frontier strategy, and I've been an analyst as well, covering a lot of industries and stocks, mostly in Turkey, Israel, Egypt, and Greece. I've been doing this for the last 24 years. I also teach a course at Syracuse University in London on emerging and frontier markets, which I developed.
Thank you, Michael, for joining Real Vision. We're going to talk about Turkey and South Africa. Can we start with Turkey? We have a referendum coming up in a couple of weeks' time. For you, I think, very much a binary event. But take us back a while and just to help us understand, how did we get to this place in Turkey, just before we talk about what the possible outcomes could be?
Yeah, it seems strange in a sense, because most people assume that Erdogan's all-powerful at this stage. And it's the narrative, effectively, that you see in a lot of the papers. But the fact that we're here is a reflection, almost in a way, of a bit of weakness. If we go back a ways, when after the Gezi protests, Erdogan felt under a lot of pressure, and he had to reassert his strength within the party. If you remember, initially there were some very calm, soothing statements from some of the other AK Party senior members, and then Mr. Erdogan came back from Tunisia, and he was very, very aggressive. And what he was doing was throwing red meat to his core constituency. He was trying to show that while there were a lot of power players within the party that had a voice, he was trying to show that he was the reasons for the party's popularity. And then as that moved on, we had corruption allegations, which came very close to Mr. Erdogan. And you ended up with an extremely, extremely polarizing situation where he was fighting for his political survival. And what do you know? He succeeded. The local elections in March of 2014, the AK Party across the country got 46% of the vote. And that was, I would stress that that was a fantastic result for him. But the key number is 46%. To become the president, Erdogan needed 50%. To win this referendum, Erdogan needs 50%. If he had the strength of a Putin or the ANC, historically at least, you'd have this confidence that, okay, we know his power is sustainable and he doesn't need to focus so much on winning elections like he is right now. So Erdogan's move to the presidency from the prime ministership, it was a risky move because basically the presidency had no power. Had he been that empowered, he would have been able to change the constitution before he even left, and then we wouldn't be stuck in this vulnerability. But he couldn't control the AK Party. He had a lot of competitors within the AK Party, and they basically said, well, we don't want to do this. We don't agree with the idea of consolidating power under one individual and basically emasculating ourselves as parliamentarians. So he decided to move to the presidency. Now, a lot of people say, oh, that's because he wanted to repeat Ataturk's legacy. It was the first directly elected presidency, so there's a lot of psychological components associated with that. But to me, the main thing was the AK Party had a 3-term limit, and we just come to the end of that 3-term limit. So all of the parliamentarians who had started and founded the AK Party with Erdogan, including Erdogan, were exposed to this 3-term limit. Had he stayed as the prime minister, he would have had to change that regulation, not just for him, but for everyone in the party, and all of his internal competitors would have stayed. When he moved to the presidency, he gets to stay, everyone else leaves. So he, for the first time, actually, when he moved to the presidency, is the first time he directly controlled the AK Party, because he ended up being surrounded by a lot of extreme loyalists. And even there, he had to fire a prime minister since, because they weren't quite, they were loyal, but they weren't exactly doing what he wanted from that perspective. So that I think is important to understand why we started this process. And why is it that Turkey's been so vulnerable since? We've had 2 general elections. Basically, when Erdogan moved to the presidency, the first general election after that ended up with a coalition government. And if you're a president that has no power beyond being able to control unconstitutionally, but effectively control the prime minister, you can't control the prime minister in a coalition government. So he sensed his vulnerability, and he decided this just isn't going to work. And he's that facilitated environment where you had the restarting of the war with the Kurds, you had the migrant crisis, you had a lot of nationalism and instability that has ended up playing into the AK Party's hands, and that allowed them to return to a single party majority. But even in that highly polarizing environment where Erdogan's rolling the dice and delivering that single party majority for the AK party, they only got 49% of the vote. And for him to change this constitution, he needs 50. And the last time he ran on a platform of the executive presidency was in that election in June of 2015, when the AK party only got 41% and change and lost their majority. So this is a tough ask for him to be in a situation where he's asking the population, empower me. So why is it that we're seeing such extreme nationalist behavior? Why is he picking so many fights? It's because he knows that he needs to generate additional excuses to win people over to this, because that organic 50% support just isn't there. And that's why this referendum is so important. If it passes, he'll finally have found some political equilibrium. He'll be confident again. And his psychology and the way he behaves should align much more with what investors need, which is to regrow this country and to get it back on the right track. If he fails with the referendum, we could easily be in a situation where he has to do even more dramatic things to legitimize himself constitutionally. And that's why I think Turkey can be an absolute mess if he loses this referendum. And don't take it for granted he's going to win. Probably a 60% likelihood that he wins, but if he doesn't, I think he's going to have to do some things that will shock even people that have not been fans of Erdogan to date.
So let's look at those two scenarios, because it sounds from what you're saying, we're in a very binary situation.
Absolutely.
We'll find out in 3 or 4 weeks. Let's assume he wins. Let's go through that scenario. He's beaten off the Kurdish and the nationalist parties. He's got his 50+% vote. What changes, and then what happens to the currency? What happens to bond markets? What happens to equities, do you think, in the following?
The key thing that changes is he feels that stability of his position. He's empowered himself. He no longer feels insecure. So the state of emergency, which has allowed him constitutionally but temporarily to empower himself post the attempted coup, has been rolled continually since then. There was a debate even initially if it was even needed. Initially, some of the ministers came out and said it wouldn't even last 3 months, but he keeps rolling it because it allows him that sole executive power. And effectively, the judiciary becomes redundant during this process. So hopefully that security, that winning constitutional legitimacy, will allow the state of emergency to fade. And the state of emergency, every time we've seen the currency weaken dramatically, it wasn't because of inflation, or it wasn't because of even necessarily driven initially by global risk off. Both of the two big examples were when they extended the state of emergency. Because if you are a Turkish corporate and you're extending credit to a customer and you are worried about, is that customer vulnerable to the state of emergency? If an asset can be taken overnight, you are going to be very hesitant to extend much credit. If the legal procedures run their course, then you know, even if this guy has a problem associated with being accused of being a Gülenist, I will probably get my money back in the interim. So the state of emergency ending is very important. And that's for everyone, because you don't know. All you know maybe is that someone's conservative socially, but you don't know what side of the fence they may or may not be on. Are they a definitive Erdogan loyalist or not? So counterparty risk should disappear once you end the state of emergency. The other thing is individuals worried about their own assets and their own vulnerability, because you see it's moved obviously way beyond people that were involved in the coup. It's hit academia to an extreme extent. Anyone that's viewed as hostile to Erdogan's objective, in theory, could feel vulnerable, and that could prove the case. So ending the state of emergency, I think, will allow people to breathe deeply and say, the worst is over. And once you can definitively say the worst is over, it's a bit like Brazil. When we went through that stage where everyone was hyper negative and still you had a lot of road to travel before you got to a stage where Brazil could recover. One thing though you could do, if someone was a glasses half full person, they could present a glasses half full scenario. And I would almost view the referendum in Turkey like the impeachment of Dilma. Had the impeachment not happened, that people would be wondering, okay, how long is it going to take for this to play out? We know in the next election she'll lose, but there would be a much longer period before the market got what it wanted. And I think the referendum is effectively like that. If he gets it, treat it like the impeachment in Brazil. It'll give clarity to the market. It's not leadership change, but it should change the behavior of the leader in a way that's much more consistent with what markets want.
It could possibly be even more powerful than in Brazil, because you get this economic uplift as the state of emergency is lifted, but then you get the currency appreciating, the corporates get the relief.
Yes.
Can you explain a little bit of that? Because you may get 2 or 3 self-reinforcing cycles, and what do you think happens to the market if that happens?
Yeah, I mean, it's, one of the big differences between Turkey and Brazil and Turkey and a lot of emerging countries is Turkey's problem is never that it doesn't grow. It grows too much usually. So it has these animal spirits, very dynamic, and people are very sentiment responsive. So as soon as the worst is over, it's not just going to be the financial markets that start to work. You probably are going to start to see real money being put to work from an investment perspective quite quickly. And because of that, the willingness to borrow in dollars, or at least feeling more secure about their dollar liabilities. And that's still the Achilles heel of Turkey, is the corporate dollar liabilities, but it will be a bit virtuous. That said, Erdogan institutionalizing power in a way that he's doing with this constitution, he could rule the country easily until 2029, and some say even till 2034, and then we could end up with a new constitution anyway. So, the risk, of course, is this is the beginning of presidency for life. But the question is, well, it still becomes a policy issue. That in itself is not a big enough reason to say this country can't work. Turkey can grow. Structurally, it'll probably diminish the growth rate. Maybe you could argue 4.5% is achievable if Turkey fully gets its house in order. Maybe in this scenario it's 3.5%, but still, this is, and cyclically there's a strong recovery as well. So if I'm a holder of Turkish assets, I know, people are very, very underweight the Turkish market generally. Bond yields are in the double digits. Why? Because the central bank hasn't been able to do its job as effectively as it should. And one of the reasons is we've gone through such a prolonged election period. Effectively since 2013, the Gezi protest, we've been in a constant state of Erdogan trying to re-legitimize himself. So we've had multiple general elections, we've had polarizing local elections, we've had a presidential election. We're now having the referendum. We've had an attempted coup. We've had the firing of a prime minister. We've had the shooting down of a Russian plane. We have had the migrant crisis, just constant political turbulence. So if we get to the end of that, the likelihood is the cyclical recovery could be quite powerful, and people's willingness, just like Brazil, so many people, when the Brazil story was starting to gel, people did not want to engage, but positioning created this extremely powerful recovery in the markets. It probably, it probably won't be as aggressive because the initial headline in a lot of people's minds will be negative, Erdogan consolidating power. But when they see it starting to tick, my guess is over a 6 to 9 month view, basically to year end, let's say, we could see that the Turkish lira will have been amongst the best performing markets in the world, currencies in the world. Bonds will probably have done quite well, but there's a little bit of a lag in terms of the central bank taking their medicine first increases the cost of funding. And equities, I would have thought people will go from very, very underweight to some will be meaningfully overweight and a lot would be neutral. So I have made the call, and I believe that Turkey replicating what Brazil did last year is a very possible scenario. Gotten a lot of pushback on this because of the way people feel about Erdogan, whereas in Brazil it was much more just a question of how soon Dilma will go. But I like the fact that Turkey has such an organic tendency to grow when you can at least present that glass is half full environment.
So Erdogan wins the referendum, maybe there's a pause, a little delay, but then you think off it goes.
Yeah, so pile in that morning.
What happens if he loses the referendum? What could be the sorts of outcomes? Does it begin to spill into Europe, for example? What do you think happens under those scenarios?
I think it's very dangerous. I mean, we've seen this episode with Holland is a manufactured crisis, in my opinion, in a sense that Erdogan wants to make sure that things do not go out of control. He's only got a 1 month window, but he also wants to rally support and to distract people domestically from the simple question of him consolidating power. I mean, obviously the fight with Holland, for instance, was all consuming domestically, and it brought a lot of people, even the opposition had to support him on this. And he's in this environment now effectively where it reminds me a bit of the U.S. after 9/11. The U.S. after 9/11, the Democrats would do nothing to stop the Republicans from anything the Republicans want to do, sign every document as long as it was presented as patriotic. So we're seeing a lot of those sorts of efforts right now, but you start to see a gradual exhaustion of that. My thought is that Bush used his political capital for a war, unfortunately, and Erdogan is using his political capital to consolidate power. Hopefully in the end, not unfortunately, but the initial assumption for a lot of, let's say from a democratic perspective, people might say unfortunately, but from a market perspective, markets don't care about democratic shades of gray as long as his policy choices after the fact are fine. people might end up being extremely happy with that choice if it creates the political equilibrium. Now back to the question, how can it go wrong if he loses? If he loses, what are his choices? An indefinite state of emergency? Yes, but that's not growth friendly. That's very destructive. Unemployment's already at 6-year highs, and it's going to get worse. The currency organically must weaken if the economy is weak, because corporates are no longer borrowing in FX and investing in Turkish lira. So ironically, at times when the current account is at its highest is when the Turkish lira is strengthening the most, because Turkey's just sucking in foreign capital and it's being put to work. So even though the risks are higher, and everyone can see that, the tendency is the currency weakens. Now that the economy is so weak, there's just an organic deleveraging, which causes, even if there's not a shock weakness of the currency, consistently this currency must weaken, because people are either paying back debt or they're no longer taking the capital from abroad and converting to Turkish lira like before. So your starting point is the Turkish lira being a little bit vulnerable. What will Erdogan do if he does not win this referendum? My guess is his choices will be continuation of the state of emergency will not work on a multi-year view. Holding another referendum, I mean, that's happened in many countries, and in Turkey when he failed with the general election, that worked as well. But because the referendum is just about him, the likelihood of that succeeding, I think, would be quite low. I think the way he would orchestrate his political recovery after a failure would be an election. And in Turkey, you have an extremely high threshold for parliamentary representation. If you don't get 10% as a party, you get 0 seats in parliament. And that was historically to keep the Kurds out. Hasn't worked lately because the Kurds have risen above that. The pro-Kurdish party, as they in previous elections had moved more mainstream. The assumption is they will go below 10% again because Erdogan has painted them with the Kurdish PKK terrorist brush. So let's assume the HDP, also their leadership is jailed right now. So they will struggle to get 10%. So from 4 parties, we go to 3. Now the other party that's flirting with 10% is the nationalist MHP. The nationalist MHP is now supporting Erdogan's referendum drive. This referendum would not be happening because Erdogan did not have the numbers in parliament unless the MHP had agreed to do this. And the reason they did is because their leader, his job was saved by the government effectively last summer when a leadership challenge against him was halted by the High Election Commission, which is effectively an instrument of the state. And so there's an element where the hostility of the nationalist leader Bahçeli against Erdogan, and it was extremely hostile in previous elections, faded because he became indebted. That's the starting point. But more importantly, he knows Erdogan's plan B is an election. And in an election, Bahçeli, the leader of the party, knows that his political career could come to an end. So that's why he supported this referendum. But if the referendum doesn't work, that election's going to happen. And Erdogan's going to only... So this referendum, all the nationalistic things we're seeing, is happening in an environment where the Nationalist Party is supporting the AK Party. Imagine how ugly things will be if the Nationalist Party is fighting the AK Party. And they're fighting for their survival. This Nationalist Party will put everything into making sure they survive in the next election. And Erdogan's incentives are doing everything he can to make sure they get below 10%. So the risk is that the Nationalist Party has to out-nationalize Erdogan. And how does he do that? There are a couple of issues where Erdogan could look weak. One is the death penalty. The death penalty he's flirted with verbally, but he knows he doesn't want to go there because if you pass the death penalty, what's going to happen is the European Union is basically going to say game over. The EU process for Turkey, a lot of people say, well, what's the difference? Turkey's never going to become an EU member, but it's still an anchor and it's still a relevant geopolitical anchor is probably the best word. Now, if Erdogan is being bullied by the MHP in an election environment, the risk is that Erdogan ends up taking up the death penalty as his own issue. He's usurped a lot of the issues of the nationalist MHP. If you're a nationalist voter in Turkey, you look at Erdogan, everything he's doing. Why would you ever vote for a nationalist party when the mainstream party like the AKP is beating up the Kurds, screaming at Europe, and really defending the national interest in an exceptional way? So my thought process is that Erdogan will, if he feels his political survival depends on it, he will embrace the death penalty. So then you have the risk of a confrontation with Europe. And if this happens in a pre-election environment where he embraces the death penalty and Europe miscalculates and responds before the election, then what can happen is Erdogan will say, well, the anchor's gone. You've just frozen or ended the relationship, which is, in theory, is what Europe should do if Turkey reinstitutes the death penalty. And then the question leads on to, why is it that the migrant crisis happened? Erdogan opened the door. It was in between those two elections. He let it happen. It was a geopolitical decision, probably. And you see that because of how easy it was for Turkey to stem the migrant crisis once they got what they wanted in return. So the decision to reopen it is heavily just a political decision. And if he decides it's in his best interest and Europe can offer him nothing in exchange, he might just go there. So the pressure that Erdogan feels on one side and a miscalculation from Europe by a knee-jerk response, they have to wait this out and only respond after the election. But if they did it prematurely, the likelihood of the migrant crisis coming back, I think, could be pretty significant. I'm a little, I think that would be quite devastating if Turkey's EU process formally came to an end. The way investors view Turkey, the way Turks view them, Turkish domestic businesses view their outlook, but also European banks. European banks' ease of doing business in Turkey, really just changed in 2004 when they became a candidate. And if you formally end the candidacy and a country's being run heavily by one individual, you might really feel a sense of, I don't know if I have enough legal comfort on a longer term view. So the EU process does create that arbitration, that balance, that idea that I at least have a voice if I'm a multinational. And that would come under pretty severe pressure. So I think that if you needed a catastrophic Turkish-driven event that leads the currency to weaken as opposed to global risk-off, my guess it would be the EU formally ending the process, which would be driven by Turkey reinstating the death penalty.
And in terms of Turkey, historically has been viewed as extremely sensitive to current account flows and the currency. Things have changed, though, in terms of the banking sector, the way they intermediate, and the immediacy of the impact of a much weaker currency. We talked a little bit earlier about does it blow up or does it bleed? Can you talk a little bit more about that? Because things have changed a lot in Turkey.
Yes. I mean, a lot of times people just say, look, the corporate debt in dollars is huge, so that means that Turkey must collapse. Now, Turkey doesn't have to collapse by any means. And the reason for that is in the past, all of the debt in the 2001 crisis, the 1994 crisis, was a huge mismatch at the banks and from foreign investors, let's say. And so immediately you get to the stage where if the currency would crack, there was a self-fulfilling need to cover that short position. That doesn't exist anymore. So that was a healthy development. Turkish retail can't borrow in dollars. Turkish retail, by the way, are very long dollars in terms of their FX deposits. Banks are now square, so they do borrow in dollars, but then they lend in dollars. So the mismatch is entirely at the corporate level, but this is not speculative mismatch. It's for investment. So that doesn't mean it's particularly healthy, but it does mean it doesn't cause this immediate urgency of I must grab FX just because the currency is weakened. What it leads to is I must cut costs because my liabilities are rising. It manifests itself. In 2009, Turkey had one of the biggest increases in unemployment in such a short period of time, almost 500 basis points increase in unemployment in one quarter, because that was the knee-jerk response of corporates to, I don't know where my revenues are going, and the currency is weakened enormously. And so it has a recessionary impact. And that's what Turkey's going through right now. Unemployment's at 6-year highs, and it's not going to get any better. And when we're in this environment where there's this lack of confidence, but as the currency continues to weaken, it just creates that continual pressure. So it is, in my opinion, much more a bleed. And where you get the big current periods of currency weakness, those happen when there is something like the extension of the state of emergency, some sort of shock that causes a little bit of capital flight. But there's also just global risk appetite. I mean, Turkey's always been the canary in the coal mine for global risk appetite. Look what the Rand did. South Africa has no structural vulnerability to Rand weakness, but the Rand is just this unbelievable yo-yo when it comes to global risk appetite. In Turkey's case, there's a fundamental reason why people say, I want to short this currency when global risk appetite is poor because of the current account deficit, because of the corporate FX mismatch. But it always runs out of steam as soon as global risk starts to appetite starts to moderate again. But longer term, the risk is basically there's no floor for the lira because of this. If the economy is weak on a sustained basis, you're going to see this constant deleveraging. And yes, in nominal terms, the lira looks extremely weak. I mean, at historic, at 4 recently in January, people talked about that's at historic lows. But you move well beyond 5 and closer to 6 even if you adjust for it in real terms in terms of your historic lows. But my argument is there's actually not a floor. Turkish corporates find the lira plenty competitive. So it's not one of these overvalued currencies that must correct, but it is a currency that because you have that mismatch, if confidence doesn't return, if we're still talking about Turkish politics a year from now as being unsettled, the likelihood is the lira will be closer to 4.5 or 5. Whereas if the politics have settled and sentiment returns, maybe corporates will stop borrowing more in FX, and you'll start to see, because the government finally gets it. I mean, Erdogan, I think, finally gets this vulnerability. The one thing that he has the current account deficit, if you have to shrink the current account deficit, it's just growth unfriendly. But South Africa has a current account deficit. But why is it that they can tolerate the rand weaken and it's not really a political issue? Because the corporates themselves don't have an FX mismatch. Who has the FX mismatch? It's foreign investors. So if you have a corporate current account deficit where the FX mismatch is put on foreign investors, i.e. these Turkish companies, if they would borrow in Turkish lira and let the global pension funds be taking the FX mismatch, then Turkey can use a weaker currency as a way to correct its problems. Right now, a weaker currency exacerbates its problems.
And I guess that's one potential outcome in a referendum loss, where there is a structural, let's call it, adjustment in the currency of the corporate sector.
Yes.
It gets switched from dollars to lira. It's painful. It's a little bit like we talked about in Hungary. It's not pleasant, but actually debt to GDP at a government level in Turkey is low enough to take that brunt, as it were, over a couple of years.
If it's just a gradual process, and if the government stops, right now, if you borrow in FX in Turkey, your losses are tax deductible, which is crazy. I mean, effectively the government is encouraging or subsidizing FX borrowing. So you need, and for a while, while this has been obvious for a long time, and even Ali Babacan, who the markets loved, he didn't deal with this, right? So, and the reason is because if you do it, it's growth unfriendly. So because of that period of deleveraging and moving into Turkish lira, because of the capital pools tighter and it costs more effectively. My guess is if it happens, it'll be gradual. So it means maybe Turkey could have grown 4%, 4.5%, but it grows at a lower rate. And the healthiest is they just grow their way out of this problem, and corporates stop, with the exception of the debt that's grandfathered, if they basically increasingly move into Turkish lira, I think the market can handle that. The risk is if it happens, I don't think it happens suddenly, because the corporates don't feel this shock reason to switch. So if the referendum fails and the Turkish lira weakens dramatically, all it'll do is create the way corporates will respond to it is not by borrowing more in Turkish lira. They'll borrow less because they'll have less reason to invest. So what they'll do is they'll keep deleveraging, but they'll probably just fire more and more people, and they'll try and do everything they can to push their EBITDA up. To get to a situation where they believe that their liabilities are sustainable. My concern would be if Turkey doesn't grow on a 2 to 3 year view, the next time Erdogan faces the electorate at the end of November 2019, if we've gone through another 2.5 years of very poor growth, the currency, let's say 4.5, 5, and really a lack of confidence in the sentiment bearishness, then the risk is you get that Hungarian style move where Erdogan says, look, this isn't working. I need to get rid of these corporate FX liabilities. I convert them into Turkish lira. The banks that can recapitalize. The banks that can't recapitalize effectively get nationalized. The state takes the liability. That works longer term for Erdogan's interest because he controls more banks. It'll be selective. It won't be forced, would be my guess, in terms of the government taking over the banks. But what would be forced is in that environment, and this will be a last resort. It's an absolute last resort, because Erdogan, I think historically has proven, as long as the markets give me growth, I will work with the markets. He's actually very, very growth friendly. But if for some reason it doesn't work out, he must manufacture growth. And if over a 2.5 year period that isn't achieved for whatever series of reasons, then the likelihood of some draconian Orban style foreign currency measures, I think would end up being relatively high. I don't think he'd do it before the 2019 election, but I think he'd articulate it as one of his strategies to try and also sustain support in the 2019 election.
So in summary, before we move on to South Africa, because I know you've got some interesting views in South Africa, it sounds like we have a very, in your view, very binary outcome
yes.
in terms of the market, and particularly for dollar investors, outcomes, whether there's a positive vote for Erdogan or not. Is there a way to position that, or is it just wait and see and then act pretty quickly either way?
Yeah, if you're not in the market at all, I would probably say wait and see. I mean, maybe if you depending upon the pricing of something, you could take a view. Maybe I have some exposure should the referendum not work out, so I can take advantage of that likely weakness of the currency. If I was long Turkish equity right now, I would want to buy some protection, 3-month protection to get me through this. And otherwise, though, I would be very ready to respond because the headlines will be negative. So the likelihood of a knee-jerk move up, I don't think you probably won't feel like you're going to miss it. So just be ready to be quick, know what you want to buy, and as soon as it's clear he's won the referendum, forget about the negative headlines. This is a confirmation of a turning point, would be my view. So it is very much be ready on the morning of April 17th.
South Africa, you have a view on their debt and how it will be rated. Talk to us about that.
Well, I mean, South Africa, I think one of the things the rating agencies have made a mistake with is that South Africa is probably one of the strongest emerging markets. Rating agencies always look at debt to GDP. And really what they should be looking at is, well, what's the vulnerability here? I mean, they look at the rand weakening, but there's no structural problem because South African companies don't have rand debt and don't have dollar debt. So the idea, I think that's the rand weakness that we went through in the previous year is a sign of South African strength because it's the one country amongst the emerging market pool where you can say definitively there will not be a policy action to defend the rand. And so if I'm a global investor and I want to play risk appetite, the rand's one of the best ways to do it. A lot of people know that because it's liquid, but I think the most important reason is because the central bank's never going to get in your way. Every other country at some stage is a threshold which you hit. Even with all of Turkey's vulnerabilities, we hit the threshold. So behind the scenes, when the lira hit 4, Erdogan decided this is becoming a political liability for me. And so behind the scenes, the central bank tightens. In South Africa, that doesn't happen. In South Africa, it's only if there are inflationary ramifications. And so longer term, South Africa has to go junk because it's not reforming and it's not growing. So the math would tell me at some stage it needs to go junk. I think they're jumping the gun effectively because of all the rand sensitivity and a little bit of misunderstanding. South Africa's average maturity of debt is something like 13 and a half years, and it's 90% in rand. So this is a country that you're not going to wake up tomorrow as an investor regretting having been there beyond just the global risk move. They're not suddenly going to default. And even on this is a 10 to 15 year story. And I know the rating agencies look that way. But what you have is a situation where Fitch is one notch above, is negative outlook. S&P's negative outlook. And Moody's, though, is 2 notches above with a negative outlook. So they didn't meet in November. They didn't even have a meeting. My guess is in April, what they're going to do is they're going to say, okay, let's recalibrate, but come back with a stable outlook. So they will stay investment grade for a prolonged period of time. But I don't think they want to feel like an outlier, knowing that one of the other two could easily decide to move to junk. And South Africa's too stable a country where you can justify, I think, a 2-notch difference. And that's one of the reasons why S&P didn't downgrade before, because they didn't want to feel too wide of Moody's. Now, my guess, with both Fitch and S&P on the cusp, both being 1 notch ahead and negative, my guess is Moody's feels a little uncomfortable being so wide. But that in itself will not create any forced selling. But the rand has had a tremendous run, and which I think was very foreseeable because the market was, because this is a currency that is such a reflection of global risk appetite. When people get too negative, when they got so negative about the Gordon fire, first the firing of the finance minister, and then the charges against Gordon, one thing South Africa shows, it has institutional strength. I mean, compare that to a lot of other emerging markets. The judiciary works, the system works. And so it was Mickey Mouse the way the prosecution dropped the case against Gordon. But there is, the one window it showed us is that you shouldn't worry so much about policy direction in this country. You should worry about the lack of reforms. And that's one of the reasons why I think that if I look at the wording that the rating agencies use in South Africa, it's too focused on the South African political risk. And I think I think it's misguided. I think Moody's has actually been much more correct in terms of how they viewed South Africa, but it still means the likelihood is they're going to end up having to downgrade them so they can defend their reasons for remaining investment grade, I think, for a longer period of time. So April 7th, I think they'll downgrade. Is the market ready for it when you look at where the Rand is right now? Doesn't really look like it. And it'll reinvigorate that debate that, well, maybe we can see some forced selling because you'll see both Fitch and S&P downgrade. My guess is Fitch will still be investment grade 18 months from now. But S&P has sort of locked themselves into a position where they're basically saying we either have to move back to a stable outlook, which I think they would really struggle to sell, or we have to act on the negative. So I think there's a little bit of ideological blinders that S&P has stuck themselves in that makes a subsequent downgrade for S&P by the end of the year also relatively likely. This is more just a tactical thing, because if the Rand was quite weak and people were already pricing in, I'd say big deal, because there's no forced selling associated with the Moody's downgrade. I just think there's global risk appetite has been very good for emerging. The next time, though, we get a bout of risk off, whatever drives it, it's probably going to be a little more painful than the bouts of risk off we've seen for quite a while, because all the other bouts of risk off we've seen have been supported by an environment where the central banks were moving in the direction that was very positive for markets. Now, this next bout of risk off, when it happens, will come at a time when the central banks are at the margin, being a little modestly more aggressive, but you won't get that knee-jerk, hey, the central bank is there for us. So my guess is when we do, even though we're in a world where it will still just be a correction, it will still be a buy the dip opportunity, it will probably be a more violent correction, I think, than we've seen for quite some time. And the Rand would probably, from these levels as high as it is right now, probably a very good way to express that. The Turkish lira will be a fantastic way to express that if the referendum fails, but it'll work against you if the referendum succeeds.
Michael, thank you very much. Fantastic tour of Turkey and South Africa, and some very timely ideas in April. Thank you.
My pleasure. Thanks for having me.